Welcome back to the show, everybody. Check out these headlines. Another Bitcoin spot ETF applicant files new registration with the SEC. Things are moving forward quickly. Citi jumps into the Bitcoin game too. You're going to love it. And American banker names Ripple alongside MoneyGram and Western Union, and wise words from Brad Garlinghouse. We got that and so much more. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show. You can follow us on Twitter and YouTube for exclusive content. Right now, it's $1.76 trillion market cap. The market is up 3.2%. Right now, 43,800 plus for Bitcoin. And we see $2,261 in change for Ethereum. 92.3 billion plus for Tether market cap. XRP at the number 6 spot is 58 cents, up 0.8 on the 24-hour, off by 7.4 on the 7-day. Look at the range of price very quickly here. We're looking at this price refreshed here at 0.5710 on the bottom and 0.5902 on the top. And you can see it's pretty tight trading range. Yesterday, we had over a 10-cent swing. That's how big the drop was in the FUD crash yesterday. So I want to remind everybody right now, if you haven't done it, it's linked to private investing, ladies and gentlemen. Let me tell you, the most affordable minimums in the world when it comes to private equity investments. You're not going to find it any better. And you know what goes along with that? The best companies in the world to invest in. It's on this platform. 47 companies. By the way, Circle, little birdie told me it's going to be back on there next week, even though it says it's sold out. What are you going to do? Yeah, I know what I'm going to do, because I just got some Circle, and I plan on getting some more when it comes in. So don't beat me to it, and don't get mad at me if I beat you to it. Click the link to my sponsor underneath the video. You're going to love it. All right, let's get started right here. Ethereum insider whistleblower Steven Nureyev says XRP will shine and plans to become an XRP investor himself. And I love him sharing that point of view. I really like Steven Nureyev coming out here of late. And I'm pulling for him to expose more and more truth about what we all understand of ETHgate. This is AJ Rajani here, and it says, will 2024 see crypto make good on its financial inclusion promise? Well, listen to what his answer is right here.
You think just first principles about what's often prevented these huge populations of people, indeed the global majority of people, from financial inclusion? I think it comes down to like a lack of identity.
There it is, lack of identity. So what's it going to be? I start thinking, this has nothing to do with AJ now, but I start thinking cynically about how do you get the masses to get a digital ID and get them all pushed into the new digital revolution we're going into, right? How do you do it? Cyber pandemic? Because remember, the World Evil Forum has said that there's going to be a cyber pandemic, not a cyber attack, a cyber pandemic, which means it'll be ongoing, right, for a while. It won't be just like one event. That's the troubling thing about this. But, you know, there's a couple different narratives here we're watching. We're watching a digital asset class be born for investment, spot Bitcoin ETFs. Then we're also watching another area, which is use case utility. We're going to get to that in a moment. But I find it very interesting, while all of this is happening, we're seeing these things finally come to the stage here. And Ripple partner Rule Match talks about the idea about why we haven't seen institutional adoption and usage at this point. And he calls it just like he sees it, and it's spot on.
Because despite what people say, institutions are coming, in reality, the crypto market has remained generally inaccessible to banks and other financial firms. Why? Well, the entire current crypto trading landscape has grown up out of a quasi-revolutionary ecosystem, primarily for retail clients, and at least initially with little to none regulatory oversight.
And he's absolutely right. And what's interesting about that comment is it's twofold. It's actually bittersweet to me. In the regard that we don't have regulation and clarity that allows institutions and institutional money to have already been in this space, and we know that they're starting to move into this space now. But it is true, we still don't have the deep, clear regulatory clarity that we all have to have in order to see that kind of involvement the way we do in the current traditional markets today. Understood. We all get that. But the blessing here, the sweet part, because that's bitter, the sweet part is that this is one of the few times that you're ever going to have the opportunity in your lifetime or anyone else's to front run Wall Street. Because this did start with the people first. And now as it grows up, the use case utility, the products for investment are being developed, and now they're going to be taken over by Wall Street and financial institutions. And forevermore, once it hits the open water, it's out to the ocean and the open sea it goes. This is Raul Advani from Ripple here talking about the impact of digital assets on regional payments. And he talks specifically about the APAC region, about how they're working very hard to bring all of the different areas in the regions of regulations together and keep them from being fragmented. Take a listen.
The comfort that you can use digital assets in those payment flows. And if you look at the APAC region, it's quite fragmented. Everyone thinks of APAC as this monolithic whole. You've got the Americas, you've got the EU, and you've got APAC. When in reality, it's 10 or 12 different markets with very different levels of development and very different levels of capacity. So we work with regulators in the region on ensuring that we get the clarity that we need to allow digital assets for payment flows.
Now, isn't it interesting that there's such a leader in all of these other countries working side by side, hand in hand with the regulators and regulatory agencies in these other countries to make sure it's done properly with transparency and oversight, protections, all of this? Isn't it? And yet here at home, they're being attacked for it by the SEC. I am still reminded and blown away by the fact that if we're going to see the institutions, we know the log jam to this market is, in fact, the ambiguity, the lack of regulatory clarity, and the absence of legislation for digital assets broadly. That's what's missing. But I have hopes that stablecoin legislation, as been said by Patrick McHenry, French Hill, and others, has an opportunity to pass in the first quarter of this year. Think of it for a moment if we were to see stablecoin legislation put through, whether it's attached to a larger bill or not, and give us the clarity that stablecoins can be regulated, properly used inside the banking and financial system. Imagine this. The first time in history, banks going 24/7, 365. Imagine that. That's why it stands out to me that Monica Long's 2024 prediction, her first one, is that crypto is going to break the speculative hype cycles that have defined the booms and busts for the industry since Bitcoin's invention. How about that one? Before the next crypto summer, we as an industry will break the cycle by paving the foundation for real-world utility at scale. You don't do that without legislation, right? You don't do that without kicking this log jam open, at least at the stablecoin level. At least in my eyes. We'll see. Very excited about that. Then this here is a video very quickly here. XRP holders, this is massive confirmation from Coinbase. Institutional money has arrived in crypto market, but they're all trying to hide from it, right? Take a quick listen.
In terms of the crypto trading and associated services, where have you seen the most demand from your client base?
Hi, Will. Thanks very much for having me. Just before I answer this question, it's worth giving a bit of context about the formation of crypto as an asset class. So over the last 20 years, new markets have been created and adopted by institutions. We're talking about FX, treasuries, credit, EM, commodities, derivatives, structured products, and so on. Typically, it takes around 3 to 5 years before clients and their banking and trading partners all adopt a new vertical. But in 2021, crypto markets compacted a 5-year into a 1-year cycle. The end of 2020 kicked off an institutional onboarding year in 2021 as traditional finance participants started to engage in crypto ecosystem in earnest. Institutional clients' volumes basically 10x as they traded $1.1 trillion in volume in cryptocurrency on Coinbase, up from $120 billion the year before. So now to answer your question, I would say every type of institutional investors have been very much involved in 2021, and each for their own reasons. So let's start with hedge funds, which are the primary users and who are using our flagship prime brokerage services to create, maintain, and refine their edge in generating alpha. The second bucket is VCs. They continue to deploy capital in the crypto economy as digital assets and blockchain technology are increasingly viewed as providing uncorrelated returns. The flows are driven mostly by LPs and asset owners who are looking to allocate to growth investments in a low yield environment. The next bucket, family offices, they enjoy lower regulatory and shareholder obligations compared to institutions. And that enables them to be more future forward and seek higher growth strategies. I would say that they were the earliest entrants to crypto as long-term investors. And this was also driven by the next generations that are more open to crypto and digital assets than their parents. Now, to a lesser degree, I would say asset managers, who are the gatekeepers of roughly 200 trillions of capital, their investment mandates and fiduciary duties are unfortunately requiring much longer due diligence. So adoption is taking time with this group. And it's, however, a question of when, not if. And at Coinbase, being a publicly listed company, we're playing a huge role thanks to a very robust suite of products and services for this micro segment. Finally, the last segment is about corporates. Very different is not necessarily about investment, but the utility function of digital assets beyond the investment aspect of tokens resonates very strongly with them. Use cases such as merchant payments, treasury management, and NFTs to better engage with their clients and fans are a proof that this segment is re-entering as an early adoption phase.
As an early adoption phase for the ones that can solve real problems for usage, right? Not investment products. See the contrast? We're watching an investment product be rolled out here in the next few days or so, apparently. Spot Bitcoin ETFs. But at the same time, we're still waiting for the logjam of clarity to kick open enough that institutions, financial institutions, banks, and all of this can start to come in and really use this in their business day to day to make it better for themselves and their customers and clients, right? That's the point. That's why I'm here. And this is no less exciting to watch, too. We announced in the first video today, Fidelity and Grayscale move forward in their filing for the spot Bitcoin ETFs, putting in their 8-A form. This publicly registers the filing for a securities offering on a platform, on an exchange. This is extremely exciting because this looks like the very next step to getting one step closer to having these things approved here. And now that we saw Grayscale, Fidelity do it, now we see Van Eck has done it. And look at this fancy little move from Citibank. Former Citi executives, I should say, are launching Bitcoin depository receipts, which are securities backed by Bitcoin that do not need SEC approval. Well, isn't that slick? How about that for the former Citi executives there? They said, you know what? Maybe we'll offer this particular option. That way we don't have to go through all the hoop jumping that everybody else is doing. But we can ride the wave of excitement from everyone else getting the spot Bitcoin ETFs approved. Now let's get to some use case, utility. This conversation is nice. You're going to like it. American banker names Ripple alongside Western Union and MoneyGram as big money transfers. If I go into the Yahoo article very quickly here, HSBC takes aim at Revolut and Wise. But as it points out here clearly, you can see there are a number of companies that offer cross-border payments. Wise has added partners with payment companies in different countries to make it easier for users to make payments in local currencies. Revolut, which is roots as a mobile payment company, has dozens of financial services over the past few years as it attempts to build financial super app. Ripple has used a technology that supports the XRP token to offer cross-border payments for years and recently rebranded its cross-border payments unit to address Ripple's attempts to build international networks for digital cross-border payment processing. There are also traditional transfer services such as Western Union and MoneyGram that are adding partnerships and expanding their use of automation for their international payment businesses. You know, it's just nice to see them recognized here. I know a lot of people are still very negative about Ripple. They've missed a boat. They don't think it'll ever happen. It's going to zero. Look, none of us know. We're investing, right? We don't know the, you know, you can't know the real answer. You can only know what you understand, right? And lean into that or not lean into that based on who you are as an individual. You know, I couldn't be more excited that Ripple is still in this place where they are, knowing that they've had to go through the lawsuit on top of it for 3 years. And this is an older clip of Brad at an MIT event speaking, but I want you to listen to what he talks about. And he brings up the story of the time when 15 senior JP Morgan executives were in his office at the same time that Jamie Dimon was saying publicly on mainstream media that he'd fire anybody working at his company if he found out they were dabbling in crypto. And we also know they have the Onyx platform, the JPM coin, right? We know that JP Morgan is the gatekeeper for cross-border payments out of maybe 3 total banks. They handle 95 to 98% of all global payments because it's them and Citi and I think one other that are like the top tier. When you think of cross-border payments and international payments, for those that are new to the space, we have to understand and remind ourselves, even if we haven't forgotten, you know, there's only like 2 or 3 top gatekeepers in the financial banking world that make all the cross-border payments for all the other banks. All the other banks have to go through a JP Morgan, right? And they don't want to. And pretty soon we get the clarity we're looking for. They won't have to. Take a listen.
When we talk about Jamie Dimon, we first have to recognize where he sits. He sits at the top of the global financial infrastructure.
That's right.
There are a few banks, of which JPM is certainly one, that make billions and billions of dollars of profit by virtue of that perch. You know, 99.9% of banks don't make money in this ecosystem in terms of cross-border payments. Jamie Dimon makes a technical term of a shit ton of money by sitting there. So when I hear Jamie Dimon saying it's a fraud, I think to myself, well, of course he's going to say that. He's talking. I mean, and by the way, there's also people who conspiratorially, he's trying to talk down the price of Bitcoin so JPM can buy it. Like the idea that JP Morgan isn't actively working in the blockchain and Bitcoin space is not true. Frankly, I don't mind sharing. There are 15 senior JP Morgan people at Ripple's offices this afternoon. Now, unless JP Morgan's going to fire them.
Does JP Dimon know that?
Apparently not. Anyway, so look, that's my thought on the whole JP Dimon thing. I do think there are people who are going to say this is, in the same manner, a very smart investor said to me, in 1997, the whole West Coast was long Amazon and the whole East Coast was shorting Amazon. We saw how that worked out. And his point was basically, look, the West Coast is obviously bullish and, there's some that are very cynical about these things and, we'll see how it works out. On the risk factor, just very briefly, because I don't want to go on too long, but I think what we have to remind ourselves is this has to come back to utility. What problem is the digital asset solving? If it's solving a real problem and it's creating value by solving that problem, then there will be value in the token. I think what's risky is there's a lot of these things, as Juan was saying, that I cannot explain why you need a token. I can't explain what the token does. It doesn't make any sense to me. And I think, unfortunately, I think that percentage, particularly in the recent ICO wave, I think that percentage is a very high percentage. I think there is going to be carnage to be had from that. And I think Grant is smarter than I am in many ways, not the least of which is on the law. But, the ICOs, the SEC regulation around securities are designed to protect investors and.
There you have it, ladies and gentlemen. That's a throwback clip, but it reminds me of where we're at. And pretty much it reminds me of how we got to where we are over the last 3 years, understanding that JP Morgan is a central holder of Ethereum. Not an accident how we got here, is it? And it's not an accident now that we sit here on 2 sides of this entire birth of this asset class. One right now is the birth of the investment products built on top of the asset Bitcoin, right? The other is use case utility, which is fastly making its way to the front stage. But I think in order to get that, we are going to need stablecoin legislation to begin to open up that potential. We shall see what will happen in Q1. I am very hopeful for it. But doesn't mean we'll get it. Right here, Eggrad Crypto says XRP short-term analysis. Oh boy, looky here. It says here in August, XRP flirted with the lower boundary of its channel, facing a significant 1 billion liquidation across crypto. Now, after 5 months, it's revisiting that zone with another aggressive 1 billion liquidation we saw yesterday. Surprisingly, the XRP bulls have staunchly defended this channel, buying into the dip as there's no stopping them. And then we see the bulls manage to triumph over the Valhalla line. It says avoiding daily candle close below it. A slight retest around 55 cents seems pretty standard. XRP, keeping an eye on the broader channel. Perspectives keep me calm and steady, cool and ready. I love that. Shout out to Eggrad Crypto for that. And here we are looking at where we are here and how we touched that yesterday with that big liquidation movement that happened. That ETF FUD that went on. Hit the whole market hard. Watch out, ladies and gentlemen. This market doesn't belong to us anymore, but it doesn't change the fact that we were here before Wall Street was. But keep it in mind, they're here now. This is their water we're swimming in. We are not the big fish anymore. And pretty soon, I'm counting on use case utility to be the price driver of this market, and maybe that can help us all get a better direction about where things are going with our portfolios. Look, that's going to do it for me. I hope you will join us in the Freedom Zone, ladies and gentlemen, where we're taking on the puppet masters, the control of government, and how to control people. The puppet masters are still doing it. They're still at it. And we know that the only freedom of speech to be found this day and age is in the Freedom Zone, because it's not on YouTube or social media. That much I can attest to. And I hope you'll join us in there for the incredible conversations we're having. Not financial advice from me or anyone else. I'll catch all of you on the next one.